everyone, it's Jennifer with Lawhon Home Team here with your real estate market update for September. So we're going to talk about some data leading up through August. So let's see what's going on and get started. All right, so we are seeing some signs of softening in the housing market, but context is important here. We're still very much in a seller's market, but we are seeing some early signs of softening. So this is from the Deputy Chief Economist from First American. Also, the U.S. housing market continues to be ultra competitive even as new COVID cases surge. But new data shows the level of competition and ensuing price increases may be cooling off just slightly. Data shows that 49.6% of homes sold for more than the initial list price in July, far ahead of the number reported in July of 2020, when 26.8% of homes were sold above initial asking price, but below June's total when 50.4% of homes sold for more than initially listed. All right, so let's see what's been going on. So let's look at the percent of homes selling over list price. If you look at July of 2020, so this is over a year ago, you had about 26.8% of homes selling over list price. Now let's look at June and July. We're at roughly at an average of 50%, so half the homes selling over list price. And we have seen that plenty of times over here in Orlando as well. Lots of demand. But now let's look at rent and see what's been going on there. This is the median asking rent since 1988. So if you go all the way down here, let me see if I can get my cursor down there. So down here, there it is. You've got the median rent price from 1988. Now you keep going. If you go all the way up, you can see where it starts to really grow exponentially as we've hit the last year. So even rent prices have gone a little insane. What about percent of income needed for a mortgage payment? So we're looking at increasing, well, that's also increasing obviously as home prices continue to increase. So if you look at the percent of income needed, this is back in January of 2019, and you can see because of the increase in home prices, obviously we've seen a big increase then of your income that is needed for a mortgage payment. What is the historical norm? It's actually been 21.2%. Probably didn't see that coming, did you? So you've got 16.2 right around January of 2019. Right now we're at about 17.1, but the historical norm has been 21.2%. What does Freddie Mac have to say? Well, the essential guide to creating a home buying budget. Most lenders agree that you should spend no more than 28% of your gross monthly income on a mortgage payment, including principal, interest, taxes, and insurance. And NAR says that the 25% mortgage payment to income share takes into consideration that a homeowner has other expenses such as property insurance, taxes, utilities, and maintenance, so that total housing expenses are no more than 30% of your income. Housing costs are not burdensome if they account for no more than 30% of income. And I've taught a finance class at the college, and this is one of the things we actually talk about, where we look at 28 to 30% of the income to make sure that a house is affordable according to your income. Let's look at mortgage payments as a percent of income. NAR's guidance says about 25%. The historical average, as we just said, is 21.2%. Today's percentage, 17.1%. What does this all mean? It means that homes are less affordable, but not unaffordable. So that's a key there. Now, let's look at 5 reasons today's housing market is anything but normal. What does normal mean? Well, it means conforming to a type or a standard or a regular pattern. So that's one of the things, characterized by that which is considered usual, typical, or routine. 1, mortgage rates. Historical mortgage rates by decades. If you look at the 1970s, 80s, 90s, 2000s, our rates were up there. And I know we bought a home, Brent and I, back in the early 2000s, and our mortgage rate was around the 6.3%. 2010s, 4.09%. 2, home price appreciation. So here's a graph showing you the annual home price appreciation by calendar year. Now, it starts, if you can see my cursor, all the way back over here. We're in 1995. Looking in the red, this is from 2007 to about 2011. Remember, this is when our market crashed a little bit and we had some issues with home values. Now, going back up to 2021, we're at 14%. So it is the highest in the last couple decades. 3, months supply of inventory. Month supply refers to the number of months it would take for the current inventory of homes on the market to sell given the current sales price. So historically, 6 months of supply is associated with a moderate price appreciation, and a lower level of month supply tends to push prices up more rapidly. So let's look at this. So we're going back. This is your inventory, months inventory, starting way back in 2011, so January 2011. Notice that supply. Very good. This is when the housing market started to boom again. Now let's go here all the way to the right, January of 2021, and this year, much lower. The issue here is the inventory. We have a very low supply compared to all these last few years, all this last 10 years. 4, days it takes to sell a house. So this is the average days that a house has been on the market. If you look at the last year, so this over here on the left is 2019. Then we hit 2020, okay? And then all the way over here to the right is 2021. Notice that the days a house is on the market is much, much less. So they're selling very quickly, again, due to the high demand and low inventory. It's kind of like your Economics 101 class. 5, number of offers per listing. The average number of offers received. So if you look here, let me explain what this is. Over here, this is starting from, 2018. Let's just say this whole year, 2018. It's telling you that the average number of offers received on a house was averaged about 2.2. Same thing here in 2019, 2.2. Now let's hit 2021, and you're looking at an average of 4.5 offers per home. Much big difference. So you have more competition. All right, so now let's talk about sales. So sales, if you look at the average days on the market, and you just saw the graph where we were kind of showing about 17, we had some with 21, but average days on the market, it's still in the blue. This is pretty much what we've been seeing, I think, just about every video. So we're still consistent with there, but now look at the existing home sales. You've seen kind of a shift here. Midwest is actually down. The Northeast is up. And I can tell you here in Orlando, we've seen quite a few people moving here. I've met several neighbors actually from New York, New Hampshire, the New England area. So we've seen that. Now let's talk about buyer demand. So with buyer demand, this is, well, first let's talk about seller traffic, because you'll see we always have our two graphs, right? Our seller traffic and then our buyer traffic. Now, this is still better. If you remember, just go back to the video from maybe 6 months ago, and you'll remember the seller traffic map. There wasn't a lot of blue on there. So yes, it is getting stable and strong in some states, just depending on the state, but it's getting better. This is good. We want to see more blue every month. Of course, Florida, still weak. We still have a lot of competition down here and low inventory. But look at the buyer traffic. Still got a lot of buyer traffic. In fact, it's pretty much strong just about everywhere. I think you remember the 1 month I did, Delaware was weak, but now that's starting to get strong as well. What about interest rates? Always got to talk about interest rates because that's kind of important. Mortgage rate projections. We always look at this. Hasn't changed a whole lot. We're still, if you look at the fourth quarter, they're predicting 3.2. That's amazing. And even for next year, we're looking at 3.35, maybe getting up to 3.6 towards the third quarter of next year. Again, amazing rate, still a great time to buy, as long as, again, you can find a house. And if you just look at the historical graph that we always like to show, these are the rates that have been going. You can see in 2018, they got pretty high, 4.8%. And now we have been increasing this whole year, and it is projected to keep increasing for next year, but still nothing like 2018. What about average FICO score? So for conventional, you're looking at about an average score of 758, FHA is 677, and VA 722. So this is for people that have already closed on the loan, not applied. So these are the average scores for those that have already closed. Now comes our update. You know that's our Orlando update. Let's talk about sales. Again, blue is 2020, orange is 2021. Now, looking at the sales, you can see we kind of hit a peak in June. That's very typical, right? It's our summer, school is out, people are starting to now do their moves. And you can look at July went down and August went down. So as far as number of sales, we've seen a decrease, actually kind of parallels from March and May, right? From June to July, just a little bit higher. And then what about the average sale price? Well, again, we kind of hit a peak again in June with the average sale price. We went down a little bit in July here, but in August, and I don't know if you can see it very well in the video, but in August, that bar is actually just slightly higher than in July. So even though in August, we saw a decrease in sales, number of sales, we saw a slight increase in the average sale price. So that's what's been going on here. So you can see our bars are still higher though than in 2020. Anxious to see what happens in 2022. Also, we have fall 2021 buyer and seller guides. They are available now. So we have one specifically for selling your house and one for buying a house. And if you're doing both, then you might want to look at both. But they cover specifically this fall for this year. If you want to get a copy, just call us or email us and I will send them to you. They are completely free. And if you ever have any questions, please call us at that above number, or you can check out our website at lawhonhometeam.com. See you next month.